Ladies and gentlemen, good day and welcome to the Railtel Corporation Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from IDBI Capital. Thank you, and over to you, sir.
Yeah, good afternoon, everyone. Welcome to the Railtel Corporation post-result earning call for this quarter. And I also would like to thank the management for giving us this opportunity to host the call. From the management team, today we have with us Mr. Sanjay Kumar, Director, Network Planning and Marketing, and he has also additional charge of Director, Project Operation and Maintenance. Second person we have today is Mr. Anand Kumar Singh, Director Finance, Railtel Corporation, and Mr. Vineet Singh, Executive Director, Enterprises Business. So as usual, we'll have a brief overview from the management side, and then we'll have a question answer session. Yeah, Sanjay sir, over to you.
Thank you, Mr. Vishal. Very good afternoon to all. So at the outset, I would like to congratulate all of you on the occasion of this last week of our Azadi Ka Amrit Mahotsav, 75th week, and 75th Independence Day in advance. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q1 results, that is FY22-23, of which was declared on 10th August 2022. The company achieved consolidated operating revenue of rupees 377 crores for Q1 as against rupees 307 crores in the corresponding period of FY21-22, registering a year-on-year growth of 23%. Railtel posted profit before tax of rupees 35 crores during Q1 of financial year 22-23, with growth of 25% on year-on-year basis. Profit after tax for the Q1 also registered the growth of 24% on year-on-year basis at rupees 26 crores. Telecom business contributed rupees 274 crores to the turnover, and project business contributed rupees 103 crores. Margin in project business has been under stress during the quarter, but the company is confident of achieving overall project margin in line with the financial year 21-22. Margins in the telecom business is also subdued due to increase in operation and maintenance cost of fiber and equipment. But the company is confident that going forward with the flow of telecom business from new sections taken over, the profit margin in the telecom sector will reach the levels seen in the past. Earnings per share for Q1 of FY22-23 has also increased by 23% as compared to Q1 of last year. EBITDA for Q1 of FY22-23 is rupees 74 CR, and the EBITDA margin is 19.22%. During Q1 FY23, the company received new orders totaling 662 crores approx, and the current order book stands at rupees 5,800 crores plus. The company has also finalized the VSS tenders under Nirbhaya Fund project for providing video surveillance systems on Indian Railways important stations, and has issued LOAs also, letter of acceptance also, which are worth about 411 crores. The project execution will begin shortly, and major part of this project shall be completed during current financial year. With a robust order book position and continued participation in high-ticket tenders we are confident about continuing the momentum of profit and growth in future. We are committed to provide best services to all our stakeholders and will continue to expand, diversify, and upgrade our portfolio of products. The management humbly acknowledges the trust reposed by the investors in the company and would like to assure you all that in spite of different challenges still being faced by the country in general and the economy in particular, the company is and will continue to strive to achieve new benchmarks in the current financial year and in the years to come. Thank you all.
Should we begin the question and answer session?
Yeah.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. So I got few questions, sorry. The first one is on the telecom services revenue per se. It has declined sequentially while the perception or the expectation was that as the railway ramps up and as the lockdown eases, the things should potentially move towards a better revenue trajectory. Can you help us explain what has led to this sequential decline in the telecom services revenue, and how should this shape up, say, for this year? That's the number one question. Number two question is on the project revenue side. Now that we have given LOA, so this 400 crores of additional revenue from the VSS will come. So what is the total project execution out of this 5,800 crores of order book is expected to happen in FY23? That's number two. Number three is on the tendering of COD, RDN, and I think we were also in the process to put towers and data centers. So what's the outlook on these tendering, and how should one expect the revenue coming in from these things? So these are the three initial questions. I have few more. Let me come back on them after these questions. Thank you.
Regarding sequential decline in telecom revenue, first we will answer that question. So actually, in the telecom sector, generally what is happening, there is continuous pressure on prices. That is one factor. That is not the only factor, but some of our billing pattern is like so that generally Q1 the revenue is not as much as in other quarters. The billing pattern, some are annual, some are quarterly. So because of that, I think you may be perceiving that. And
Sanjesh, I'll just add to what DNPL had said. In the quarter ended 31st March 22, we have booked a one-time DRDO income of 13 crores, which was against installation of lease line Pan India. So if you see, this is a 13 crore. If you add that to 273, you will see the revenue pattern similar for the sequential quarter also.
Okay. So what you are telling and what Sanjay sir is telling, if I what I can conclude from it, that despite 13 crore not being, despite seasonally Q1 being slightly slower on the revenue recognition, these numbers are good. So that establishes a base for a much better growth coming in next 3 quarters or the 9 months. Is that a fair assumption?
yes, yes,
Absolutely, yes.
Okay, great. And on the project revenue side, with the VSS being awarded and large order book, what should be the project execution for this year?
So if we talk of project business, VSS in specific, in particular, out of this 400 plus crore order, we expect that we can book about close to somewhere around 300 crore of revenue this year. And overall project business revenue, we are expecting to book this year is somewhere around 800 to 900 CR.
Including this 300, right?
Yes, yes.
Oh, oh. And here we are not facing any challenges in terms of equipment supply and all. Will that be fair?
We are in fact taking that into account so that if any other eventual or any other incidental hurdle doesn't come into play, any other shortage so we are expecting that international semiconductor shortage issue will continue to be basically subsided, and we will be able to deliver.
So this is assuming that the easing of chipset happens and we should get then there should be no supply chain, so we should be able to 800 to 900 crore normalized.
Yes.
Okay. And where are we in terms of tendering COD and RDN?
RDN tender is under evaluation, is under final stages, and COD tender is also is likely to be. We are likely to get bids this month itself. Its last date is, I think, 22nd of August for the bid submission.
Okay. And by when we should see this? So
and about towers and data center tenders. There was third question was about towers and data centers. So these two projects, data center as well as towers, this year or maybe even next year, first half, we are likely to get any revenue because these are the long gestation period tenders. This will take some time to get executed, and then only the revenue will start.
So it will only come in second half of FY24?
Yes.
Okay, so we are at least 18 months away for that, right?
Yeah.
Okay. Thanks for these initial questions to get answered. And few more. Project business EBIT margin has been under 4% now for 2 quarters. So what is leading? Because earlier I think we were doing at 9, 10, 11, 12. In few quarters it was better than that because I think there was a contribution of COD. But even if I remove, we have always been about 8 to 9% EBIT margin. So what is causing this subdued EBIT margin in the project business?
Currently, if you compare with the sequential quarter of March, we have clocked 3.94% margin in the project business. This is basically because of the execution of an FNET project, which was a defense-related project, which was taken at a margin of 4%. So we are executing this project, and this will, in fact, be completed in this financial year. But let me assure you from the management side, going forward, by the end of this financial year, we will achieve the profit margin in the project around 8.37 to 8.5%.
Okay, got it. And the lower margins in the telecom, which Sanjay sir told in his opening remark, was more to do with the equipment challenge and all. How are we seeing that trend? Is that easing out? Will the margins, which we were doing earlier at 28, 29%, are we on track to go there?
See, here, I'll take this question. Here we need to understand one thing. We take sections, OSC sections from the railways. Okay. Now these sections need to be maintained. There are some sections which are taken where the margin, the revenue is very skeletal, but it provides me a ring. It provides me a ring for the existing network so that the SLAs do not occur. But here, when we take these sections, we are looking for fresh businesses, new businesses, and when the new businesses will be onboarded, the profit will be there for all to see.
So what profit should we look on a normalized basis?
The 19% which we are showing, it can go up. If on these new sections, if we are able to onboard railway business, the revenues can go even higher, the margin can go even higher. But 19.5 will be the basic norm going forward also.
So 19.5 steady state at least we will do, and if we were able to sweat the asset better, then the margins can only go up, right?
Yes, absolutely right.
Got it, sir. Got it. Just two last bookkeeping questions. Employee cost of this 50 crore is a steady state, right? It's after the revision of the wage bill, right?
Yes. It is due to increase in the salary of outsourced staff, where we need to maintain with the Minimum Wages Act. Then there's a 10% escalation also. So this employee benefit is normal incremental.
Okay. And the access charges were also higher this quarter. That is more to do with the supply chain challenges, you said.
Access charges, yes.
Access charges are generally related with the telecom business from projects which we are taking up. So there we are going away from railway track network. Basically, our network is in two parts. One is where we have network along the railway track, but we are now basically going beyond railways also, wherever customer needs are there. And till now, we have been able to build around 20,000 plus kilometer of network, which is not along the railway track. So we are earning revenue from such network also. There, of course, our access network expenses are there.
And basically, it is contributed by the O&M expenses also.
Yeah.
The access charges have gone up due to O&M expenses also.
Got it. And what is the CapEx expectation for the full year?
150 CR.
Got it. Thank you, sir. Thank you for answering all my questions, and best of luck for the coming quarter.
Thank you. Next question comes from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Hello. Thanks for the opportunity. Sir, my first question is related to this RDN project. You mentioned that it is under evaluation. So, is my understanding right that I think the last date of bid submission was somewhere in the first week of July or end of July? So we must have received the bid, and now we are evaluating, and as and when the evaluation finishes, we will announce the final bidder. Is it right?
Yes, it is under final stage of evaluation. So as and when it is decided, the final bidder will be announced.
Okay.
Final winner will be announced.
Okay. And I understand you cannot mention the name of the bidder, but
No.
if you can just give us a broad understanding that how many bids we have received, and just the kind of companies who have bid.
It is under the custody of tender committee, which is a confidential matter. So it is not disclosed prior to final declaration of winner.
Okay. Even you can't say how many bids we have received?
No.
Okay. And any broad sense of only the domestic or the international?
I think let us avoid such questions
Okay.
in this forum.
Okay. And my second question is regarding this Railwire, our broadband business. So how many subscribers we have, and how much was the ARPU this quarter?
Subscribers 4.69. 4.69. So yeah, 4.69. And the ARPU is around 560.
560.
Yeah.
Okay. And how do you see this subscriber addition by this year end? Because I assume that in one of the 6-month back presentation, it was mentioned that we were targeting 10 lakh subscribers by year end. So do you see or doing that?
See, what is happening in this industry, there is always volatility, and new operators are coming in. They are launching new models, OTT, IPTV, and all that. So there is a struggle, and Railtel basically mostly targeting urban, semi-urban, and rural segments. We have recently launched our OTT plus IPTV in localized circles, local circles, 1 or 2 circles, and we are expecting good results from that. So growth during this financial year, if not 10, at least we are expecting that it will be around somewhere around 7 to 8 lakhs.
Okay.
Yeah.
Okay, fine, sir. That's it from my side. Thank you.
Thank you. Next question comes from the line of Venkatesh Subramaniam from Logic Tree. Please go ahead.
Hi, sir. Mr. Singh, Mr. Sanjay Kumar, good morning, sir. How are you, sir?
Yeah, good morning. Thank you.
Great. So I have 2 questions, sir. One is, can you give us some update on how the Kavach project is proceeding? Is there anything that we need to know, any new developments? And the second question is, for the full year, sir, broadly for FY23, I think in our last calls, we guided for about 20-25% growth. Any sort of revenue guidance can you give us?
So Kavach is basically, it is under development stage yet. It has not yet come out.
Okay.
We have, in fact, in Indian Railways, Ministry of Railways has set up a center of excellence for complete specification of Kavach. It is not yet developed completely, but few tenders were floated by some zonal railways. Railtel did not participate in those tenders because of this reason only, that we would like to partner with some OEM, at least where when the product is completely or to a large or substantially matured. That is one.
Right.
So we will certainly be in this segment, but we are waiting.
Okay.
That is one. And regarding FY23 guidance, 20% will be there.
Broad top line growth, sir? Yeah.
Yeah.
And is it safe to assume EBITDA margins at 19-20%? What would that number be?
Yeah.
Yes.
Yeah, okay. So coming back to Kavach, so Kavach significant developments or partnering, choosing of who do you want to tie up with will happen this financial year or next financial year, sir?
This financial year itself. This financial year.
Yes. Okay, sir. I have 1 or 2 more questions, sir, but I'll come back and join the queue after some. Yeah.
Thank you. Next question comes from the line of Amit Kumar from Determined Investments. Please go ahead.
Yeah, thank you so much for the opportunity, sir. Just wanted to get a sense, with the 5G on the horizon, what kind of growth visibility you are looking at, in your towers business, both in terms of new towers as well as tenancy in existing tower base for the second half of the year. Because I in fact, my sense is that 5G is supposed to be launched in August itself, but got delayed a bit. So can we expect anything in the second half of this year? But the question is more from a fiscal 24 perspective.
5G per se, I think you might be reading every day. The telecom operators, they are being given time to deposit their spectrum fees basically, and the momentum to basically install equipment I don't think that there'll be sizable expansion on this account. They'll be launching it in few select cities. So this year, or maybe next H1 of the FY24 also, there's not going to be much movement due to this technology inclusion in the services. But certainly 5G is going to play a major role. As far as Railtel is concerned, we are interested in private network rollout, and we are in fact exploring opportunities to tie up with some private investment and use our right of way so that we offer our right of way to other telcos and industrial establishments which are along the railway track, because we have a dedicated right of way. So that we are exploring, and we are consulting on this with experts also. So this is on the enterprise business side. As far as tower is concerned, we are likely to come out RFP, wherein we will invite private investment again to install towers, at least one at each station to begin with. So that, because right now we have roughly around 1,000 towers and we have 6,000 plus stations. There is still space to have more towers, and the post 5G deployment, we expect that average tower tenancy should be in the range of 1.5 to 2 minimum. It can be more also, depending upon the basically activities in the telecom sector, because Vodafone Idea, BSNL, there are some players where we can't expect a lot, but two operators are there. So we are still keeping our fingers crossed, but we see that this tower infrastructure will be a good opportunity for Railtel, because we are providing fiberized towers. Whatever towers we will be offering, all those will be fiberized. I think I'm clear about.
Thank you so much. One sort of, in fact, two small follow-ups. One, what is the current tenancy in your tower business? And the second is, you mentioned BSNL. I forgot BSNL also is planning for a 4G launch apparently this month itself. Have they signed up with you on 4G?
BSNL 4G will also, I think, will take not less than a year. Okay. Because they are probably doing POC. They have done POC. And complete rollout will take time because it is indigenous product. This will take some time to be manufactured within the country, and with the kind of semiconductor chip shortage and all that. I'm not the right person to comment on this, but I cannot comment much for BSNL opportunity.
The initial point, what is the current tenancy in your towers, please?
Current tenancy is around 1.25 to 1.5.
All right. That's it from my end. Thank you so much.
Thank you. Next question comes from the line of Viraj Mithani from Jupiter Financials. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Yeah. So my question is only one. I read about this low orbit satellite being launched in India sometime soon. What kind of technological threat is this to our company would be? Or is it an advantage or is it a threat? That's of question one.
I don't see any threat at least, but I am not confident that it's going to play a major role in Indian telecom industry. This is my personal opinion, but nothing much is going to be basically affected in the industry.
Okay, and sir,
It may be of use in some remote areas that I can say, but those remote areas are very scantily populated.
okay, and
Northeast or Ladakh region.
And sir, Railways done a lot of optional projects for the Army hospital project. Is there any way that Railtel is thinking to monetize this in future for some private things or any government organization?
Can you please repeat your question?
There was an hospital management project done by Railtel for, I think, railway hospitals. It was more or less on a non-profit basis, correct? And then so is there anything, I understand we must have done expertise from doing this kind of project. So is there any thought in the management to monetize this kind of this capabilities to, say,
It was not on non-profit basis.
Okay.
It was not on non-profit basis. It is with proper profit, healthy profit margin.
Okay.
So, yeah.
Is there any then further thing we are looking to monetize this?
We are actually health sector. The digital transformation of health sector is a focus area for Railtel, and we are working with many bodies like AMTZ is one, Andhra Meditech Zone, where we have set up our data center. We have already done a POC project of around 9 crore with Karnataka government, ESIS, and we are executing POC kind of projects in few of the All India Institute of Medical Sciences also. And we have, because in India, health sector, there is lot of requirement of digitization. As all of us know that there's shortage of doctors and paramedicals. So this is our focus area.
So will you give some color, like how it would be, how big it could be next, say, 4-5 years, not immediately, but some management vision on this thing?
See, 4-5 years right now, maybe I may not be in position, maybe before the beginning of FY24, we may be able to arrive at some number. But we are continuously working with the partners to develop, like there is requirement of application. Health management information system, hospital management information system is one, which is from the management side point of view. There is learning management system also, college management systems also. But from patient and doctor point of view, the interaction can be digital and it can be in the local languages. Okay. Like a patient may be from Tamil Nadu. So for them, the development has to take place. So we are working with some partners from some application service providers who are developing applications. There we can really, we see really a good number to come. But right now, I'm not sure, because we have already integrated with NDHM.
Okay.
And we are in touch with NHA also. How can we take medical facilities to the rural areas, remote areas, which is the strength of Railtel.
Okay. Okay, that's it from my side, and all the best.
Thank you.
Thank you. Before we take the next question, I request to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Twanisha from Investec. Please go ahead.
Hello, am I audible? Hello.
Ma'am, you're not audible, ma'am.
Hi, is it better now?
It's okay. Yes, please go ahead.
Thank you for giving me this opportunity.
It is not audible. It is not audible.
Hello, is it okay
Hello?
now? Hello.
Hello?
Hello.
No, there's noise actually. There's noise in the background.
Okay. I actually just needed the breakup for the telecom revenue between MLD, ISP, and IP.
Okay. NLD revenue this year, this quarter is 127 CR, ISP is 93, IP1 is 54, and this is from telecom. And revenue from railway project is 32 CR and other projects is 64.
Thank you.
What
so
you
much.
wanted?
Yes, that's it. Thank you.
Thank you. Next question comes from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Before the question queue build up, I just thought to probably ask a few of the questions. So one thing you did mention, on a previous participant question, that margins we are expecting in the range of 20-odd%. But sir, I think in this quarter we have done 20-odd% at EBITDA level. And going ahead, the thought process is probably we'll do project business 8.5, and then telecom will further move. So, will it be possible for you to now comment, for the full year basis, how at a console level we are seeing the margins, EBITDA?
I think Director of Finance sir has already commented that we are going to maintain this because see, we are doing two kinds of projects. One is wherein we have a top line as well as a bottom line. So then the margin is around 8 to 9% in such projects. But we are doing some projects which are consultancy kind of projects, where we are consultants to the project and we are basically master system integrators. We float the tender on behalf of the purchasers, fix the agency, get that work executed for them. And in such cases, we have hardly any expenditure. So such project business will certainly help us in maintaining the margin or even maybe improving the margin.
Okay. Sir, maybe
Vishalji, if I can add, what I said regarding the EBITDA margin of being 19%, we tend to be a bit conservative in this regard. But yes, the company's endeavor will always be to see that it exceeds 19%. For which, as sir just said, we can have some contracts which will straight away add to the bottom line without any expenditure or commensurate expenditure being incurred for that.
Okay, sir. Okay. And then probably maybe segmental wise, if the numbers are maybe if it is handy, project you mentioned probably will do 8.5% for the full year basis. For telecom at a PBT level, margins for telecom, how exactly do you see things? Because I think historically we have done pretty strong numbers in terms of PBT margin for telecom in the range of 20 or plus minus. So how do you see this for FY23? Anything that you have seen or probably worked out?
Yes, I had said this to investor who called earlier. You see the margin of 19% was maintained, but simply maintaining the sections, being static as regards the sections will not help us. So we are in the process of taking over more sections from the railways. And there are sections where the earnings from those sections compared to the cost which we incur to maintain it, the earnings are negligible. So yes, that impacts the margin. But the potential of getting higher business, newer business from taking over those sections, by creating a ring we save on the SLAs, that benefits will translate going forward.
Okay. So, but then from business point of view, if we are expanding, so then will it the expense will it be more like a capex and balance sheet, or probably it will have impact on P&L?
No, it's a revenue expenditure. Now see, if we have a section where we have a linear section, in case there is any cut or disruption, the services are impacted, which results in loss of revenue. Now, if I'm getting a section from the railways which helps me to create a ring, I'm able to continue giving uninterrupted services. My revenue is maintained, and further, on the new section taken over, we explore new businesses, rail wire being one of them, onboarding new customers is other. So it helps us to increase the revenue. So it not only matches the cost but exceeds the cost. So we look at it in this way that we have new sections. Initial stages we may need to incur expenditure, but going forward it will be a revenue generating action from our side.
Okay, sure, sir. And second thing, I think on Kavach, you mentioned a couple of zonal railway, they have come out with the tenders. But I think any reasons any reason that Railtel has not participated, because that would have given us some bit of experience in terms of execution, and then probably a couple of other capex, which is like tower related capex is linked with that. So just wanted to understand. I mean, one thing is reason for not participating, and how big.
Presently, Kavach industry is close to monopolistic. There are, I think, 2 or 3 OEMs. Only 2 OEMs or 3 OEMs. 3 OEMs are there, and they are trying to play monopoly. In such environment, in such circumstances, it is very difficult to get competitive rates, number one. Number two, the technology itself is not yet foolproof. It has been tested in the present form, but it is still being tested with LTE-R features, and those are being still tested by the railways and related industry, related R&D bodies. So we have recently, I told you, we have recently set up a center of excellence in Sikandrabad for the same. So we are waiting for that moment to come.
Okay.
And we are waiting for the right moment to come, pitch in. But I can assure you that there is no other system integrator in the industry who is better suited than Railtel to do such projects.
Okay. And then when you mentioned
there is huge opportunity for Kavach and related this thing. Kavach itself is around 30,000 crore fund, basically sanctioned projects are there.
Okay. And then, so I think you mentioned on a couple of players who are, the structure which you mentioned. So, is it possible to name, who all are the players? Probably they are probably a monopolistic, I think.
That you can, I will not name, but they can still find from Google search. There's nothing to hide in that.
Okay, sure. And maybe last thing, and then come back in the queue. I think order book continue to remain strong. I think execution, again, you are guiding it will be 8-9. So in terms of inflows, can you guide what has been the order inflow in this quarter, or have you done any working? Because in BSC we keep on seeing announcements. So what is the inflow?
This quarter we have received orders more than 660 crores.
Okay. And they are in terms of margin trajectory, will it be possible to guide the incremental order that we are getting, it is on 8-9% sort of margin, or it is more like a low margin project?
There are some projects which are 8-9% margin. There are projects which are related to telecom also, which are mix of telecom and project part also. So, of course, margin will go up because there are telecom services being provided by Railtel in that. So, margins certainly more than 8% because there are some bandwidth kind of elements included in those projects. Like one order which we are executing for Delhi Safe City, which is around 220 CR, which has an element of bandwidth also, telecom bandwidth also. And such projects will help us in actually growing our rail wire business also, because we will be laying a lot of fiber within the city. which will give us an opportunity in growing our last mile. Basically, we'll be going close to the customer.
Right. And it will be fair to say that incremental orders that we are getting, 600 to 700 crore that you mentioned for this quarter, it is on competitive bidding. There is no nomination as of now.
Yeah. These all are competitive bidding.
Okay, sure, sir. Thanks a lot. I'll come back in the queue. Thank you.
Thank you. Next question comes from the line of Parimal Mithani, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. Can you hear me?
Yes.
Hello. Yeah, sir. I just wanted to know the update in terms of the railway display network as well as content on demand. When do you expect them to take place in terms of revenue, sir? For which quarter or maybe a year later? Can you give us a guidance in terms of the project finalization timeline?
See, we are expecting. There's some noise coming from, I think, from your side. Okay. Parimalji, this tender is yet to be bidded, so we can't forecast right now. Maybe by the next quarter, we may be able to say something about COD.
Hello.
Yeah. Could you hear us?
Yeah, sir. For railway display network, sir?
Railway display network is under the final stages.
Okay, sir.
So maybe, yeah.
And sir, for the rail wire business, I just wanted to know, do we provide service to the Common Service Center also? Of government?
No, not yet. No,
not yet.
Common Service Center is not government. Common Service Center is a SPV.
Okay.
Yeah. So government we are certainly providing directly. But, yeah.
But there are no outstanding dues pending from them, right, sir? If I understand.
No, not pertaining to this. We have not yet started any relationship with CSC in this regard. There are other projects going on with CSC, but not with.
Okay, sir. Thank you. Thanks for the answer. Thank you.
Thank you. Next question comes from the line of Venkatesh Subramaniam from Logic Tree. Please go ahead.
Two questions follow-up, sir. One is, you were talking about Kavach and the Center of Excellence in Secunderabad, and you said something like we are probably the most competent, one of the best in the class in terms of bringing in system integration into this. Can you elaborate a little bit more on it? And if there's the order size for execution is going to be in 30,000 crore range, plus you mentioned value-added projects. Is this a project where the entire thing will go to one bidder, or would it be split into 2-3 parties? And would this be like an annuity kind of project over the next 5-10 years? Can you give us some color on it? What do you think of this?
Number one, this is a project on pan-India basis, and zonal railways will be inviting tenders for fixing agencies. So there will be multiple sections, and they will invite tenders for section by section. So this is not going to be 1, 2, or 3.
Right.
Number two, you talk about Center of Excellence. The Center of Excellence has been set up by Government of India to basically fine-tune the specifications, and that to more in the line to basically align it with LTER, basically LTER technology, because right now it is not developed for LTER.
Right.
It is future technology.
Okay.
So that will be second. And if you talk about value added, Kavach per se will not bring any value added, because this is entirely for in-house usage for railways, Indian railways. But yes, there are many third world countries where once we establish ourselves as a player, we can take this technology, and it is indigenous technology, so we can export this also once we develop a domestic manufacturing ecosystem.
Right. My question was like, once you implement the Kavach order, sir, once it's in place, then is there like a maintenance angles to it every year? For example, if you talk of other public sector companies or DRDO or anything, there's an agency that develops the whole thing, then there is somebody who implements it, and then there is an annual maintenance that goes in. That's what I was basically looking at.
This is the practice. Whosoever is basically deploying it, they are doing the annual maintenance contracts also. Generally, this is the practice. This has been.
We will be bidding, or we will be going for it once we are ready with what we want to bid. We will be joining hands with somebody else and then bidding for this project. Is that right, sir?
Of course, we need to join hands with the some OEM who is developing or who has developed.
Okay.
There are at least two to three OEMs which we know they are under the development stage.
Are we already talking to them, sir?
Yeah.
Okay, wonderful. So, and what is this 30,000 crore project if it comes to light? Would that be split between 2-3 bidders, or how does it work?
I told you there will be multiple.
Okay.
There will be n number of bids separately coming out. Yeah.
No, sorry, my question. I think my question was a little bit needs more clarity. Will this order be split into 3-4 orders, 10,000 crores? Would that be the way?
No. There'll be 200-300 crore kind of orders.
Okay, right. Depending on the zone.
Yeah. Depending upon the zones and sections, importance of the sections.
So,
there are mainline sections, busy sections, there are tier 2 sections, so first they will concentrate on the high density traffic sections.
Got it, sir.
And the sections also depend basically the long distance sections, they are basically part of different zonal railways.
Right. Okay, so would it be fair to assume in an open bidding system with multiple bidders, and if we join hands with the right OEM, can we aspire for getting, say, 20-25% share of the entire project?
Yes. Conservatively, yes. Yeah? That is clear?
Thank you. The line has been disconnected. We'll take the last question now. The last question comes from the line of Viraj Mithani from Jupiter Financials. Please go ahead.
Sir, 3 questions. One, what from you saying, it means this quarter was a subdued quarter, but coming quarter will be a good quarter. That's fair to assume, right?
Yes.
And sir, what is our cash in the balance sheet?
Cash is 557 CR.
Okay. And sir, there was a talk of IRCTC Railtel sometimes from media reports. Any updates by the government on that, or?
We are the wrong person to comment on this because this is the government to decide. So I think we are not the right person.
Okay, sir. And sir, the last question is, broadly you are guiding double-digit growth, that is a 20% growth top and 20% EBITDA margin. That's the correct way to assume, right?
Yes.
Okay.
And Virajji, I stand corrected. My own cash fund is 522 crore and not 572. I apologize for the error.
Okay.
522 crore. And yes, revenue guidance of 20% top line and EBITDA of 19-20% is yes, which the management is looking forward to.
Okay. Thank you and all the best to you, sir. Thank you and have a great day. Thank you, sir.
Thank you.
Thank you. This was the last question. We have reached the end of question and answer session. Now, on behalf of IDBI Capital, that concludes the conference. Thank you for joining us. You may now